Hey, what's good, self-direct investors? I hope you're all doing great, and I want to welcome you back to my channel. If you're new here, my name is Jordan. I'm the mind behind Make More Capital, and today I'm coming at you with a special episode to cover APHA's not-so-great earnings and then some other early developments we've seen this week. So before we jump in, if you enjoy this video or you learn something, please just leave a like on it as it really helps out my channel. And then, of course, if you want to learn how to take advantage of this generational investment opportunity, make sure you subscribe below so that you don't miss any future videos, and then there's plenty of content for you to go back, rewatch, and educate yourself with so that you can get caught up to speed. Now, although in January and February we thought we were going to the moon and all was good, you cannot have the good without the bad, unfortunately, at times. And I want to be your cannabis news guy for the good and the bad. And I want to provide context to explain why it's not as bad as it looks and why it's also just important to consider doing your research and making a plan before you get in. Because for anyone that was buying in February, I do feel very bad for anyone thinking that getting in at that time would give them an opportunity to eventually allow it to keep rising and sell for a profit. Now, we don't know what is going to happen or how stock prices are going to react. Mind you, the best thing you can do is really try to learn and educate yourself about the company you're investing in and understand the business that you are buying shares in. And I want to reiterate, this is why I've been focusing so much on US multi-state operators and not Canadian licensed producers, because although the European market has potential, and so does the Canadian one, the Canadian population is very, very small. And so during time periods where there's not as many sales, we will see a decrease in quarter-over-quarter revenues. And also, although Europe is a great play, and that's why I'm still invested a large portion of my money in APHA, that's still a long ways away. So it's not too late to consider looking into US multi-state operators at this point, but just consider this a lesson when jumping in, when your neighbor, your uncle, your cousin, and everyone you know is talking about cannabis and starting to buy. That's not necessarily the time to buy at all-time highs. That would give you an indication to start paying attention, start watching, start educating yourself, and then over time, we could see something like this happen, and it gives you a better entry point. Now, nonetheless, let's see what all the fuss is about. Their main highlights is just reporting their 8th consecutive quarter of positive adjusted EBITDA and positive adjusted EBITDA from cannabis business. So they are reporting their financials from their third quarter and 9 months ended. So this is December, January, and February 2021. All amounts in Canadian dollars. Now, what does their CEO, Irwin Simon, have to say? Our global team executed well in the very fluid, ongoing COVID-19 operating environment. We proactively managed our expenses and maintained our positive adjusted EBITDA for the third quarter of fiscal 2021. The duration and impact of lockdowns across many of the regions we operate in, particularly in Canada, were greater than we initially anticipated for the cannabis industry and our business. However, we believe APHA remains well-positioned in our leading brands and market share to experience a robust increase in our top lines as the market improves. In the US, we had a solid first full quarter of contribution from Sweetwater, even with lower on-premise sales compared to the prior year quarter, as many food service industry establishments were still operating with limited capacity. Going forward, we are excited about the strategic opportunities for incremental growth as we look to parlay our branded consumer products in additional complementary product offerings in Canada, the US, and internationally. Mr. Simon continued, we remain excited with the opportunities created for both APHA shareholders and Tilray stockholders in completing our proposed business combination with Tilray, and believe that together we will create one of the strongest global cannabis and consumer packaged goods companies in the world. We expect to have tremendous runway for long sustainable growth as we build upon our existing foundation in Canada and internationally by increasing the scale of our global operations. We expect APHA and Tilray's complementary cultures of innovation, brand development, and cultivation to further set us apart from others in the industry, along with the strength of our balance sheet and cash availability as we enhance value for all stakeholders. Now, if you happen to know why there's a difference between APHA shareholders and Tilray stockholders, please let me know in the comments, because I just noticed that and just find it's interesting, the different wording. Definitely, I think it means something. Now, a highlight for them is, of course, coming to agreement with this and having this pass. But I just want to highlight here is, if we can see, APHA did maintain its #1 licensed producer status in Ontario and Alberta in terms of sales to the provincial boards based on headset data for the period of December to February, the same as its prior fiscal quarter. So if APHA was the #1 LP with still the most market share, this is not a good sign for the other LPs as well. So again, I do want to highlight that fundamentally, if you look at the balance sheets and you look at the quarter-over-quarter and year-over-year growth, APHA is still the strongest Canadian licensed producer by far with the top market share. So that still says something just about the state of the market, much less about the company itself. But, as many people bought a lot of cannabis to end the year of 2020, they didn't necessarily have to buy more in 2021. Maybe, with vaccinations, people got back to their regular lives. There was less novelty about being able to buy new products over the holidays. Many factors do come into play. Now, they did improve its market share in Quebec, rising to second licensed producer in terms of sales to the provincial board based on internal analysis. And then let's just jump down to the numbers because, this is not great, but again, still for the Canadian market, which is quite small, still one thing I think is important to highlight is that year over year, from Q3 in 2020 to Q3 2021, they did still manage to increase. And although the growth was not big, year-over-year growth is still, overall year-over-year growth is still what you want to see out of a company. Now, their gross profit did fall from $59 million from Q3 last year to $31 million. Their adjusted gross profit from cannabis did fall a bit, but mind you, 39.2% from 42.7%. It's not a huge fall. Their adjusted beverage alcohol gross profit rose to $7 million for the first time, which really highlights what Sweetwater does bring as a bit of diversification into their portfolio. And their distribution gross profit did actually increase, so they did manage to improve their business there and their operations and cut costs. Now, their net income loss shows $360 million, and their adjusted net income loss, I do apologize, I don't necessarily know exactly how they managed to get to this difference, but regardless, they did shrink it from $360 million to $47 million, which you want to see because $47 million is a lot lower number. And they did have an adjusted positive EBITDA of 12.6, which is an increase from 5.7 last year. So when you're looking at profitability metrics and year-over-year growth, these are still strong. And so, one difficult quarter is just a speed bump in the long term if you're investing for the long run. Now, from Q2 to Q3, their distribution revenue did drop from $91.7 million to $87 million. Their cannabis revenue took quite a hit from $67.9 to $51.7, and their beverage alcohol revenue went from $881,000 to $14.8 million. Now, this does show just strong sales from Sweetwater, which does, as an investor, make me happy about the brands that they ended up purchasing to again add to APHA's portfolio. But their net revenue did decrease by $7 million. They sold a lot less cannabis, so that's also an issue of demand and the fact that Canada's market is still very, very small and stores are in the process of opening. They're not already opened and expanded like they will be at the end of this year. Their cash cost to produce dried cannabis did increase from 79 cents to 90 cents, which again, not ideal to see. Wonder why that happened. And their all-in cost did increase from $1.30 to $1.54. All across the board, though, they did suffer losses in their cannabis business under development. Their alcohol business did grow in their EBITDA terms, and their distribution business suffered a bit of a loss. Mind you, they did come out of this quarter with more cash, $187 million last quarter to $267 million, and they have a lot more working capital at $503 million, up from $399 million. And so their net revenue for the 3 months ended February 28, 2021 was $153.6 million, an increase of 6.4% from $144.4 million in the same period last year. However, the third quarter fiscal year 2021 net revenue decreased 4.3% when compared to the prior quarter net revenue of $160.5 million due to decrease in net cannabis and distribution revenue, partially offset by an increase in net beverage alcohol revenue from the acquisition of Sweetwater. So this was a great purchase, timing-wise, in November of 2020 to add, again, to their diverse portfolio, but to add to decreasing revenues in other areas. Now, as they say, though, as a result of the ongoing effects of COVID-19, including provincial lockdowns and provincial boards taking measures to lower their inventory levels, which had previously included forecasted cannabis market growth, the company experienced what it believes is a transitory reduction in demand during the quarter. These provincial government measures resulted in decreased orders from provincial boards and product returns of approximately $5 million. not much you can do when the government wants to send back a lot of the cannabis that you've provided them with. The company mitigated a portion of the product return by finding alternative distribution channels for some of the products, but experienced a reduction in net cannabis revenue as a result of $4.1 million. Now, the average retail selling price of medical cannabis did decrease from $6.69 per gram in the quarter compared to $6.96 per gram in the quarter. The decline was a result of specific pricing programs offered to assist patients in need who have been negatively infected by the pandemic. Now, keep this in mind. You want to retain your medical patients. So if you have to decrease costs in order for them to stay buying your product, then that's one of the things that you have to do, especially in this situation that's been ongoing over the past year. And the average selling price for adult use cannabis before excise tax decreased to $3.82 per gram in the quarter compared to $4.29 per gram in the prior quarter, primarily due to consumer trends towards the purchase of large format and price compression in the market. And so adjusted cannabis gross profit for the third quarter was $20.3 million, with an adjusted cannabis gross margin of $39.2 million compared to $31.2 million and 45.9% respectively in the prior quarter. The decrease in adjusted cannabis profit and adjusted cannabis gross margin was primarily due to lower yields that are typically experienced in the company's third quarter due to less sunlight in December through February and the impacts of the product returns described above. The remaining difference was due to the overall decrease in average selling price based on sales mix. So that adds a lot of context as to why. Their adjusted distribution gross profit for the third quarter was $11.4 million, with an adjusted distribution gross margin of 13.1% compared to $12.1 million and 13% in the prior quarter. The decrease in adjusted distribution gross profit was a result of a decrease in distribution revenue at Aphria's CC Pharma subsidiary in Germany, driven by restrictions which negatively impacted pharmacy revenue and the importation of inventory from other countries. So lots of moving parts based on the fact they are diversified and have many businesses contributing to their overall strength, I would say. And during the quarter, the company's adjusted gross margin on beverage alcohol decreased from 60.5% to 47.9%. The prior quarter's gross margin included only 5 days of sales, with a sales mix that more heavily skewed towards on-premise consumptions in the prior quarter, when things looked better after what we've seen happen over the winter. Now, last thing to point out, their operating expenses in the quarter increased to $100 million from $82.7 million in the prior quarter, an increase from $50.9 million from the third quarter of the prior year. The increase from the prior quarter was primarily driven by the impacts of the growth in the company's share price in the quarter on non-cash share-based compensation expense. So I imagine based on what the share price went to in February, someone maybe got a bonus for that. I imagine that's what that means. And the addition of a full quarter of operating expense from Sweetwater, including the amortization charges on its assets. The remaining increase is from transaction costs associated with the acquisition of Sweetwater, the proposed business combination with Tilray, other potential acquisitions, and one-time litigation costs. During the quarter, management identified that COVID-19 and the provincial lockdowns were going to be more impactful than initially expected. In response, management implemented several cost-saving initiatives in the quarter, protecting the company's profitability and adjusted EBITDA. And so, although their net loss did come in what looked like at the beginning, $360,000. It seems like they converted on some debt and was able to bring that down to $47.9 million. Some of the other companies, Canopy and Aurora, that are suffering larger losses. I think this still highlights that in Canada, it's just a tough market and there's a lot of government regulation. So Aphria still absolutely stands out as the top Canadian licensed producer. And cash provided by operating activities, they did decrease their free cash flow from last quarter, or their loss of free cash flow from $16.3 million to $3.8 million. So all in all, not great numbers, but it's a quarter in what is a very long game. And the last thing I wanted to point out that I didn't get to cover, Aphria still has 5 slots in Germany with a cultivation facility on the ground there. So post-pandemic, they will have that head start in the European market that is still early, still very small, but will have a lot of potential to grow over the next few years. But I think it's quite clear that Aphria is the outlier in Canada. All the other companies that will be struggling, just as much as they are, and we will likely see that going forward. Organigram will release their numbers tomorrow, so I will check that out on the Wednesday midweek update. Now, a few things to point out. As we saw the Chicago Tribune article last week, talking a lot of ish about Green Thumb Industries, this is just another example that was brought to my attention. I just wanted to go through it and show you that although this does not look great, it's nothing illegal, but this also just goes to show how things work. Not necessarily about what you know, more about who you know. One cannabis company keeps coming in the recent Florida matters with Gaetz. It's called Trulieve. Here you go. DeSantis signed the first bill of his administration into law in March 2019, lifting a ban on the sale of smokable medical cannabis by licensed dispensaries. Trulieve became the first to legally offer smokable medical cannabis flower, selling the product at its dispensaries in Tallahassee. It is owned by Halsey Beshear's family, the former DeSantis BDPR secretary, who was apparently third Republican involved in the Gaetz sex trafficking investigation. Trulieve has high-paid lobbyists in Washington, D.C. and Tallahassee, from Ballard partners including Brian Ballard, Chris Dorworth until yesterday, and Sylvester Lucas. Dorworth is buddies with these guys involved in that Gaetz sex scandal. Now, Dorworth resigned yesterday after his name was tied to these folks. In December 2020, Trulieve gave $25,000 to DeSantis' political committee. Again, nothing illegal about that. That's how the U.S. works. You have to lobby your politicians in order to change their mind to benefit, your business or what cause you're trying to get across. And March 8, 2021, DeSantis elevated Trulieve's lobbyist Sylvester Lucas' son, Adrian Lucas, from Deputy Chief of Staff to Chief of Staff. Now, that again is just an example of something that shouldn't be allowed. That's like, again, who not opposed to hiring people based on their skills and what they can provide. But, that seems to be the state of where we're at. Not much you can say other than that is what it is. And, we hope going forward that people have a bit more integrity, and this is not how people get hired or how people do land job positions going forward. But, nothing we can do to control that as investors. Now, point 8, on March 29, 2021, DeSantis announced he opposed caps on THC for medical cannabis. By the way, Gaetz is a huge proponent of medical. This has nothing to do with anything. Why does this lawyer need to add that this person who's, being targeted for sexual trafficking allegations, what does this have to do with medical cannabis? Like, he's trying to tie cannabis to sex trafficking, which completely irrelevant. That just makes me very angry. Anyways, who knows? Maybe this is all coincidence. In any event, Trulieve stock is killing it. And, well, again, that's just how American business works. So, to point out, though, Trulieve donated $25,000 to this political committee. When we look at what tobacco had lobbied in 2020, $27.8 million, and the leading lobbyist industries in the U.S. in 2020 by total lobbying spending, and you wonder why cannabis has been illegal for so long? Look how much big pharmaceutical companies are spending, $306 million just last year, fighting to keep cannabis illegal. Now, the best part is that you can't ignore reality and the fact that the cannabis plant is the best medicine that we have, and I think we are seeing that, and again, the momentum is behind us with Chuck Schumer hopefully bringing some reform soon, but this just is how business works in the U.S. Hate to say that it is what it is, but for now it is what it is until cannabis companies or people with more money can counter what Big Pharma has been doing for a very, very long time. But the good news, let's end this episode on a lighter note. Key takeaways as companies add scale in key markets to position for strong second half of 2021 and 2022. In our discussion with management teams and investors, we believe the potential size of the legal cannabis market or of legal cannabis continues to expand with new states legalizing, but the focus is squarely on operators with profitability, secure balance sheets, and access to capital in becoming the industry leaders. We believe most large multi-state operators are focused on narrowing allocated investment capital by deploying into specific U.S. states to drive profitability, with access to capital still extremely limited to smaller operators due to U.S. federal illegality. Management discussions with investors focus primarily on the capital raises to deploy in broadening footprints, building scale, and expanding profitability to defend companies' positioning ahead of eventual U.S. federal legalization. We believe continuing state legalization expands the total available market, with discussions focused on New York's recent preliminary adult use regulations to significantly benefit the 10 incumbent MSOs, as Columbia Care, Curaleaf, Cresco Labs, and Green Thumb are the best positioned for outsized growth and market share capture in the state of New York. Now, analyzing recent state data, consumer demand overall remains strong despite seasonal softness in January and February tied to pandemic lockdowns. During discussions, top MSO management teams confirmed industry-wide sales have picked up since stimulus checks were issued in mid-March, which bodes well for another sequential positive quarter of cannabis sales for U.S. multi-state operators. In management discussions, one concern has surfaced around the Standalone Safe Banking Act potentially being lumped into Senator Schumer's cannabis legislation to try and approve more comprehensive cannabis reform, which we feel has a tougher road of acceptance with a 50-50 split Senate. While encouraged by the apparent pace to move quicker on social justice reform with cannabis, we believe the incremental legislation approach to get bills right makes more sense to move cannabis policy forward one piece at a time. Overall, few industries are growing as fast as the cannabis space while currently trading at attractive valuations. So it might be one piece at a time. We have no control over that. The best thing that you can do is, again, do your best to not have to sell your position for a loss and stack up as much cash just to try and hold out and wait out the storm. We don't know how long this is going to be, but again, if they do choose to do it piece by piece, the longer that it takes, I do think still the greater potential uptrend we will see once the trend reverses. Now, a few things just to add. Legal cannabis market value predicted to reach $64.2 billion by 2027, covering pre and post Rona market analysis. Acuman Research and Consulting released today. So Acuman Research and Consulting, well, basically just that's the title. They have a report down here if you want to check it out. Now, they don't provide like a high estimate or a low estimate. This is just what they're saying. So again, emphasizing the U.S. market is likely the best case scenario for any new investor to get into at this point in time. But obviously, it's important to do your research. None of this is advice. I'm just trying to educate you in hopes that you're going to take the time to pay attention and try to make a plan and therefore so that you can position yourself well for the long run. And on top of that, we do have Uber CEO saying that the company could get into cannabis delivery. Now, this is again just he said, she said at the moment, but in an interview with CNBC, Uber could start delivering cannabis once federal regulation allows the company to do so. CEO Dara Khosrowshahi told CNBC on Monday, when the road is clear for cannabis, when federal laws come into play, we're absolutely going to take a look at it. Absolutely going to look at it. I mean, Khosrowshahi said in the Tech Check interview, for now, the company said it's going to focus its efforts on its current delivery options in its key categories, such as food and everyone's favorite gateway drug, alcohol. Now, that's, again, not a diss. I mean, alcohol is, a substance in itself for its own purposes. But point is, more and more industries are lining up to get into the cannabis space. Again, once federal regulations allow the company to do so. And that is why, there is a lot of pressure on Schumer and the Senate to stick to their word. So, folks, remember to be patient, but also revise your plan. Check it. Stick to it. If it's not a good one, consider making a new one. There's lots of time. But I just wanted to highlight the good and the bad because fundamentals on the ground in the U.S. are solid, despite, unfortunate Canadian numbers. But this is all part of the learning process, so I hope you did find this video educational and helpful. If you enjoyed it, please leave a like on it. Please subscribe below if you don't want to miss any future videos, and I will see you on Wednesday for a midweek update. Have a great day, everybody.